Hi, it's Mitch from Reverse Mortgage Pros. In this video, I'm going to look at a reverse mortgage compared to a home equity line of credit or HELOC and revisit this. This is one of the first videos I ever made for my channel, so I'm going to update it and revisit this subject because it's an important one for many people considering a reverse mortgage. Let's get started. Now, if you're new to my channel, I offer free professional help with your reverse mortgage decision. Please consider subscribing, hit the subscribe button or the like button below this video to get more content like this, more help and education and information about whether or not a reverse mortgage is right for you. Now, in this video, I'm going to revise looking at a reverse mortgage compared to a home equity line of credit. It's one of the first videos I did maybe 4 or 5 years ago. And since it's published, there have been some changes to both products. So I'm going to update everyone on this, particularly since a home equity line of credit is often the product that someone's considering as opposed to a reverse mortgage. And there's also one very important aspect of a HELOC that all retirees in particular should know about, something that impacts retirees more than it does younger working income people that are still working and haven't retired yet. So stay tuned and make sure and watch the rest of the video to get that important information if this is you. Before I get started, as I do at the start of every video, I'm going to explain what is a reverse mortgage in 20 seconds. It's a mortgage for homeowners that are over 55 that doesn't require any repayments or no monthly payments. Instead, the interest is added to the balance owed. You can get around 15 to 55% of your home's value depending on your age, property type, and location. You can take as much money as you qualify for, but any existing mortgage must be paid off first. It's designed to help you tap into your home equity to help with your retirement and to continue to live in your home forever. In this video, I'm going to look at a reverse mortgage versus a home equity line of credit because that's probably the product that people are considering against reverse mortgage. And I'm just going to compare all the different aspects in with two halves of the slide like this. So let's start with how much can you get. Reverse mortgage is up to around 55%. The amount depends on your age, location, and property type. As I just mentioned, it's in the range usually of 15 to 55%. Home equity line of credit is a little bit more, up to 65% of the home's value, but the amount is instead dependent on your income and your credit score because you have to qualify and prove that you're capable of paying whatever the balance is that you qualify with for a HELOC, much in the same you would with a regular mortgage. The actual qualification process for a home equity line of credit regular mortgage is exactly the same, whereas a reverse mortgage, there is no qualification process based on income. It depends on the property type and your age. When it comes to interest rates, reverse mortgages tend to be a bit higher than a regular mortgage, but not as high as second mortgages, private mortgages, and many other products. I have a video on that comparing interest rates across different products if you want to check that out. A home equity line of credit tends to be fairly similar to reverse mortgage. I would say that over time and in the long run, they're probably marginally lower, but also much higher than a regular mortgage. So if you take a look at the last 5 years, for example, and 5 years ago, a home equity line of credit was a lower rate than a reverse mortgage. 3 years ago, they were higher. Home equity line of credit was a higher rate than reverse mortgage. Home equity line of credit changes is a variable rate that can go up or down, whereas reverse mortgages tend to be taken at fixed rates. So that's one thing to bear in mind is that the interest rate on a home equity line of credit can go up and down as the Bank of Canada changes its rates. Reverse mortgage, you can fix the rate for 5 years, which is the most common reverse mortgage rate that people take. You can't get a fixed rate home equity line of credit. So there's a little bit of risk there with interest rate and home equity line of credit that you don't have with reverse mortgage. Monthly payments. So reverse mortgage, there are no monthly payments. They're voluntary. You can choose to pay the interest, pay nothing, pay certain amounts that the lenders will allow. Whereas with home equity line of credit, the monthly payments are mandatory. You must pay the minimum interest due each month. And if you don't keep up with your payments, you could lose your home. That's something I'm going to discuss in the next slide. Can you lose your home? No, reverse mortgage, there's no payments. So there's nothing for you to default on. So the lender has no reason to come after your home, foreclose on your home, or take your home. But with a home equity line of credit, if you fail to keep up with payments and not make your payments, it's actually going to impact your credit score really badly. And also the lender could eventually come after your home for repayment of the balance. So that's something to bear in mind as well when comparing the two products. Can you repay the outstanding balance? This is where a home equity line of credit is a little better because of a reverse mortgage, you can pay the balance at any time you like, but there'll be early payment penalties, which reduce over time but are fairly severe in the first 3 years in particular. And again, I have a whole video on penalties where I outline all the details and penalties that you can check out on my channel as well. A home equity line of credit is actually a completely open loan, so it can be repaid at any time with zero penalties. So definitely there's an advantage there to home equity line of credit over a reverse mortgage. Can you owe more than your home is worth? A reverse mortgage is a non-recourse loan. You cannot owe more than your home is worth. It's capped to the value of your home. Technically, with a home equity line of credit, the balance is not a non-recourse loan and the balance is not capped or reduced. So if there was a big housing market crash and your home value dipped below the balance on your home equity line of credit, you would actually still owe that money. They could come after your other assets. Technically, very unlikely to happen in both situations, of course. What happens when one homeowner passes away? So this is a key piece of information that I referred to at the start of the video when I said it's important for retirees in particular, where you're starting to think about estate planning. So when one homeowner passes away, reverse mortgage, nothing changes. The remaining homeowner keeps the reverse mortgage. You're both on the reverse mortgage and absolutely nothing changes. It's designed for this circumstance, reverse mortgage. A home equity line of credit, however, almost all lenders are going to require the surviving homeowner to re-qualify in full. That is, they'll have to prove they have enough income to make the monthly interest payments themselves and re-qualify for the whole mortgage balance. And this is a big deal because generally speaking, if a homeowner were to pass away and you're both retired, one single homeowner probably isn't going to have enough income to qualify for the home equity line of credit on their own. And this could be why you're considering a reverse mortgage, because you might have had this situation happen to you where lenders coming asking for their money back from a home equity line of credit. So that's something not super well known and not discussed widely, but it's an important thing that you should know if you're a retiree and you're thinking about estate planning and what happens in the future. That is a big downside to home equity line of credit, is that it's not a lifetime loan in the same way a reverse mortgage is. So that also leads to the next question: what happens when both homeowners pass away? So with reverse mortgage, the balance plus the interest will be paid off via the estate, often by selling the home, but not always. If the estate has enough money, if the heirs decide to take out a mortgage and use that to pay off the reverse mortgage. But the most common situation is the home being sold. With a home equity line of credit, it's exactly the same. The balance plus any interest will be paid off via the estate, often by selling the home as well. Both of them can't be inherited. You can't inherit a home equity line of credit. You can't inherit a reverse mortgage. When the homeowners pass away, the amount that you have borrowed is due immediately to the lender. There's no getting around that. So there's no advantage or disadvantage here. They're both exactly the same. That's why I copied and pasted the wording to be exactly the same. So that's something to think about as well. What I also want to discuss is a third option where you can kind of combine the concepts of both a home equity line of credit and reverse mortgage and get the benefits of both. And what you can do is that you can turn a reverse mortgage into a home equity line of credit, sort of. And I regularly advise my clients about this because then you get the benefits of home equity line of credit, but none of the downside, the stuff that I talked about, the requalifying if one homeowner passes away, the monthly interest payments being required, the risk of losing your home, all that stuff. So what you can do is make voluntary payments to the reverse mortgage and repay the interest. So a home equity line of credit is a loan and you pay the monthly interest, and that's the minimum amount that you're required to pay each month. You can do this with reverse mortgage, and essentially then you've turned your reverse mortgage into a home equity line of credit. So what you do is you just set up a manual repayment to the reverse mortgage every month to pay the interest. And that way it's exactly the same as a home equity line of credit. The balance owing will never increase because you're paying down the interest every month. But the big advantage is that it's voluntary, that interest payment. I call it the reverse mortgage home equity line of credit. It doesn't exist. That's a made up name that I made up for this product. But you're manually kind of creating this by making this voluntary payment of interest each month. So you get all the benefits of a home equity line of credit, but none of the downsides. And remember as well, this payment is voluntary. You can cancel it. Let's say if you're having a bad month for cash flow and you don't want to make the payment that month. Whereas with a home equity line of credit, you can't just skip a month's payments whenever you feel like it. So it's a lot less restrictive than having an actual home equity line of credit. So why would you take out a home equity line of credit, and why would you take out a reverse mortgage? If you qualify for a home equity line of credit and you're comfortable making the monthly payments, it's a solid mortgage option. The only downside is the piece that I mentioned where you would have to requalify if one of the homeowners has to pass away, and you have to be obviously comfortable making the monthly payments. That's the key downside really to a home equity line of credit, because there's a risk if you don't do that you're going to lose your home. If you're not comfortable, you want to get rid of the monthly payments, you're concerned about one homeowner passing away and leaving this mess to the remaining homeowner where they can't qualify for the home equity line of credit, then a reverse mortgage is a very good option. And particularly if you adopt the strategy that I just discussed, where you turn it into a home equity line of credit by making the monthly payments. And you can do this in any kind of way, shape, or form that you like. You can say every second month I'm going to pay the interest, and then I'm going to skip a payment. It's completely flexible because the payments are voluntary in that situation. So you can kind of create a blend between a home equity line of credit and a reverse mortgage, where some interest is being added to the balance, but not all the interest, because you're making payments whenever you feel like it. So in summary, in this video, I reviewed the differences between a reverse mortgage and home equity line of credit, and I also discussed a third option where you can kind of combine them into both manually by creating a product I call the reverse mortgage line of credit or reverse mortgage home equity line of credit. Again, it's a made-up product. It's just a strategy rather than a product that you can adopt where you get the best of both worlds. Hopefully this video helped you to decide which product is right for you. It's going to depend on your own personal circumstances. For many people watching, a home equity line of credit is totally fine, and for many of them, a reverse mortgage might be a better option. It's going to depend on you and your situation. But if you would like some help and advice with your particular decision, I offer a free professional reverse mortgage assessment in just 90 seconds. I'll advise you if it's a good solution for you, if something better works, if a home equity line of credit is maybe better, what kind of rates, terms, fees, which is the best lender and the best deal for you. All of that completely free. All it takes is just 90 seconds. You just click on the link in the video notes or go to ReverseMortgagePros.ca/assessment and just complete a simple 90-second online form, which comes to me, and then I help give you the best advice and for your situation. Again, that's ReverseMortgagePros.ca/assessment. Otherwise, if you have any questions or comments, or if there's something maybe I didn't address, leave it in the comment section below, and I'll answer every single question, every comment I get on my videos. Otherwise, I hope you found this information and useful, and best of luck.